Hello everybody, what's going on? Few important updates are coming from Nios, and this story start at 2025 World Intelligent Connected Vehicle Conference, where Nios chairman Lee Bin laid down a powerful truth about the assisted driving market. He essentially said that if it's truly easy to use, then people should pay for it on demand. It sounds simple, but it cuts right into the heart of why so many assisted driving systems, and by extension, the company behind them are struggling to find solid ground. Right now, the key problem is that the tech isn't usable enough. Users aren't willing to fork over big money for a feature that only works half the time or is constantly giving them control back. Lieben revealed the tipping point. The 50% critical point is when assisted driving can significantly improve traffic efficiency, especially in the complex urban areas. That when customers will gladly open their wallets. Now let's look at this from Neo's perspective, and this is where the smart money is moving. Why is Neo a car manufacturer so committed to a subscription model? The answer is simple: cost and sustainability. Lieben was very clear: building and maintaining this technology comes with a significant ongoing cost. Think about it: performance cost, running the powerful onboard computers and sensors. Second, training cost, constantly feeding the AI system with new data to make it smarter and safer. Third, communication cost, over the air update, real time map data, clouding processing, and then the upgrade cost, replacing hardware over the car's lifetime to keep up with the tech curve. Further, he added that if an enterprise has no source of income to cover these perpetual costs, the system and frankly the company's financial model is going to be unsustainable. They can't just sell you a car once and then support an ever improving high tech feature for a decade for free. A subscription model changes everything. It creates a continuous, predictable revenue stream, what we call recurring revenue. For a growing EV company like Nio, recurring revenue is pure gold. It makes their financials look stronger. It funds the very R&D that makes their car better and ultimately drives the valuation higher. So the question here is that where does this leave you, the driver, and you, the investor? This isn't just about Neo making more money. It's about a positive feedback loop that benefits everyone. For the customer, a subscription model, when done right, means you get a guaranteed of perpetual improvement. If you are paying a monthly fee, you expect the product to get better every month, not just stagnate after you drive it off the lot. It shifts the company's incentive from a one-time sale to long-term customer satisfaction. If the assisted driving truly reach that 50% critical point, where it make you commute demonstrably faster and less stressful, that monthly fee will feel like an absolute bargain. For investors, this is a huge bullish signal. It signifies a transition from a traditional automotive manufacturer, which is valued on number of cars sold, to a high-tech recurring revenue platform, which is valued on longevity and profitability of its services. This shift has been a key driver for companies across the tech world, and for Neo, it's a blueprint for a much higher multiple. The commitment to a subscription model shows that Libin and Neo are playing the long game here. They are investing heavily in the infrastructure and the software, understanding that in this new automotive era, software is the engine of profit. So while the current reality is that assisted driving still need work, Neo's strategy of subscription only is foundational step. It's the engine that will fund necessary breakthrough. It's not just a revenue choice. It's a declaration of faith in the future of their technology. And when a company shows that kind of confidence, investor should take notice.